Guys, RSI, okay, it's a touchy subject. I know a lot of you guys are in love with your indicators and oscillators, but I don't use it anymore, and there's a couple reasons why. I'm going to dive deep into that. Okay, so let's roll the intro and let's talk about it. All right, traders, what's going on, guys? Welcome back to Motive FX. It's your boy Cleveland. Hope you guys are having an awesome Wednesday. It's like the 5th Wednesday of the month. That's pretty interesting, right? But we're about to wrap up this month. We do have some pretty large fundamental data releases coming out later on this week, so make sure you guys stick around for that. I will be covering NFP and a couple of the other data releases coming out. We also just did have a flash CPI earlier this morning, actually, for the Eurozone. Okay, it came out a little bit positive. We did see a little leg up on that Euro USD, but things actually did pull back a bit. We are in a USD JPY long right now. If you guys take a look at the screenshot here, you guys can see we did see a consolidation at that low, and we're hoping for a push up into structure. Okay, so we talked about that trade on a Sunday night, then we talked about it again on Tuesday. Jesus called it out earlier in the chat room this morning, and we were up a little bit over 45 pips, and then markets did actually get pulled back a bit. We saw a lot of volatility come in. There was a Fed meeting at 2 o'clock today. Again, we're going to be discussing that a little bit later on this week in regards to the fundamentals, but we did sustain. Okay, we did sustain, and so I'm assuming right now that if we get a little bit of US dollar strength, just a little bit, okay, it was hit really hard later last week, and even again on Tuesday this week. If we see just a little correction back up into structure, we should hit off on the target there, which is right around the 110s. Okay, so obviously stay up to date on what's going on there. Okay, folks, this stuff happens fast. All right, markets are just very, very rambunctious at the moment. Okay, we're at all-time high volatility, so make sure you guys are subscribed so you can get this information ASAP. Okay, and of course, guys, like the video for your boy. And later on this week, I'm also going to get into what the hell is going on here in terms of this massive, setup I have, where am I, and all those different things. I haven't even mentioned it, but I am going to mention it eventually. I just got a lot of plans going on right now. I'm spending a lot of cash to try to make something really cool here in Atlanta. All right, so guys, let's cut to the chase. RSI, what's up with RSI? I know a lot of you guys are using oscillators and indicators, and I want to give you my opinion on them because a lot of traders love them. Okay, they love them on occasion. They can yield an edge, okay, from time to time, but folks, if you're playing these things in the wrong market, you will get decimated, okay? You will get absolutely destroyed, all right? And so what I'm gonna do is I'm gonna go over three pairs, okay? Three pairs, the CAD, the Aussie, and the GBP, and I wanna show you guys how RSI performed for literally over 20 days, okay? If you're looking at the 4-hour or even the daily RSI on those three pairs since around December 25th, I think we're gonna look at maybe the CAD all the way back at December 12th, you actually didn't make any money. You lost every single position where the RSI mentioned overbought. All right, so I want to go into that with you guys. I want you guys to bear with me. Look, I'm not saying RSI doesn't work. Okay, I also have another pair that I want to show you, the USD JPY, where it performed absolutely amazing. Okay, the point I want to get across here is that there's a time and a place to look into the RSI indicator and a lot of these other indicators and oscillators. All right, remember these indicators, they're all lagging, right? They're all telling you what's happening in terms of price information for the past few days or so. All right, and then when it comes over into RSI, it's relative strength, right? So it doesn't do a real good job at anticipating or understanding volatility. Okay, as we see volatile markets increase and decrease in volatility, you have a hard time adjusting to reading that RSI correctly. Okay, so I'm going to go into a quick spiel as to what RSI kind of is in case you are using it and aren't really sure exactly how it's structured and functions. And then I'm going to show you guys those examples in the chart where RSI, again, it did not perform real well. And that's where I kind of say, hey, look, if this thing is going to be telling me I need to be buying or selling something, I don't need that in my head kind of giving me that intuition or, edging me over to not execute on those style positions. All right, so my psychology needs to be clear. I like to trade with naked charts, basic structure, price action, and then Fibonacci is obviously the only thing that I really throw onto my charts. Of course, candlestick reading, the things that you can look at and see and determine in terms of market participation and price volatility and momentum. And of course, if you watch that channel, you know that we don't use anything else, and we do a pretty good job at anticipating where these markets can go. Okay, so guys, again, just a quick breakdown of what RSI even is, right? Relative strength index. Again, now most of you guys already know what this stuff is, but again, I kind of want to help you clarify clarify it. The most important part of RSI is actually that time period, right? So we do know where markets will isolate between those two readings, the lower bound and the upper bound. I'll show you guys a screenshot of the RSI on the Thinkorswim terminal here, and you guys will see that the lowest reading is a 0 level and the highest reading is a 100 level, right? So the most common placements of I guess where people coin overbought and oversold scenarios is either 80-20 or 70-30, okay? So that's going to give you your basic idea as to say when markets are overbought or oversold, right? But again, the main part about that entire equation is actually the length of time, okay? The time period that you basically say, hey, how far do you want to read back? Okay, so if you want to read back prices, maybe let's say 30 bars back, right? Well, then you're basically going to be acclimating 30 time periods all into one equation, okay, which is going to give you a very slow lagging indicator. All right, usually people don't do things in that capacity. Usually people will slam that thing forward, and you're usually executing at 14. Maybe you'll see somebody at 20. You oftentimes see people down at 10 in terms of the time period. Again, I'm going to show you guys over here in the chart, but just understand that when you have your actual time period skewed so closely to the actual data, to the live data, then you're going to get very, very, very volatile reactions. And so the actual equation, if you guys care to know, right, your terminal is going to do it for you, is 100 minus 100 divided by 1 minus RS. Okay, so the RS is definitely the most important part there. And if we go into what RS represents, that's where the whole time period that you factor into how much data do you want to be looking at when you're fixing up your actual indicator. That's where the time period goes into, right? And so again, it's a division, and you're actually doing, hey, out of this amount of time periods, how many times did the market close above the previous time period, okay? And so let's say we have a 10 period RSI. Well, that 10 period RSI is going to be asking the question, okay, well, out of 10 periods, how many times did the market close above the previous period? And then it's going to take that and then divide it, and then it's going to do that same thing on the downside, right? So how many times did the market close, okay, lower than the previous period? And then again, that's going to give you an idea as to basically the relative strength. Okay, are we getting a weaker market or are we getting a stronger market? You divide that out, and then boom, that fits all over into the equation, and then you basically get your tick up or your tick down on the RSI, right? So if markets tick higher in your charts, well, then your RSI is going to follow it because your RSI just read, oh look, a time period just closed higher than the previous. We have to acclimate now those few time periods that we're looking at. We have to acclimate that into the equation, which means we need to start skewing markets higher. And so again, it's basically a volatility index. It's letting you know the momentum and the directional move of markets, telling you that, hey, look, markets are probably at a high based off of the time that we're looking at. This is definitely an oversold reading or definitely an overbought reading. You might want to look into playing that as a pullback. And I want to show you guys over here how, again, that is a little bit misleading and can actually get you into trades that you definitely should not be in, especially if you're not taking into account the underlying sentiment of this market. All right, so let's pull over into the chart real quick so I can show you guys the RSI, and again, how in certain times it does perform pretty badly, and you are honestly just best suited to look at markets yourself and develop the skill set to being able to understand the ebb and flow of markets and when you think markets are too momentous and when they actually deserve to see a retracement. All right, so let's pull over into the charts so I can show you that process here. Alright guys, I have the GBP USD up here and I have my RSI down below. What I want to mention about the RSI, if you guys head over, this is Thinkorswim. By the way, I'm going to show up the RSI parameters here, okay? And so as you guys can see, I have 14 price bars in, I have an overbought at 70, I have an oversold at 30. Again, those are the most common increments or parameters put into the RSI. The other would be the 80-20 for overbought and oversold, okay? So at a 14 period RSI, you're getting a somewhat volatile RSI, but not the most volatile. You see people also oftentimes crank that bad boy here up to 10. You can see them push it all the way back to 20, right? And so the thing is, usually you don't change that according to the time frame, right? So that's really just kind of there, and you're assessing all time frames with that exact same parameter, which is why I said it doesn't take on volatility too well, because obviously on those lower time frames, you're going to get a little bit more volatility. So you could potentially be whipped in and out of moves if you have a pretty fast RSI. And on the other side, if you have a slower RSI on those higher time frames, you might miss moves because, again, folks, you're acclimating too much data and you're not able to correspond and trade with the actual market itself, right? So it's lagging, and when you crank out that period so far out, it becomes even more laggy. Okay, so I have up here a GPU, and I'm actually executing right now on January 8th, right? So I love Thinkorswim because it's amazing for back testing. This is a free platform, by the way. And so again, you can back test data, and right now we are ticking live as if it was January 8th. 2017. Okay, and I can also fast forward 3x if you guys can see here, to where basically markets are moving 3 times faster than they normally would. Okay, so that's pretty cool. So I want to break down this chart real quick. Okay, I want to break down this chart, and I want to use RSI. Okay, we're going to be using RSI as an indicator of, hey, we might want to start shorting the market. All right. So let me pull this down a bit. I don't think we need it so high. And let's break down this chart. Okay, so let's pull up on the monthly. Where are we on the monthly? Well, definitely on the monthly, as you guys can see, we are heading back up into the 3920s. Okay, so if we were to have targets right around the 3920s, then potentially we will start to see markets reverse around that area, but that's the monthly time frame. Let's go back down into the weekly and see where we are on the weekly. As you guys can see, we're really just holding these highs up here in this structure. So we're holding the highs at the 35s pretty well. Right now we're sitting at 35.60. Maybe we could see a push back up into structure. So I definitely want to go long in this position when you're looking at that higher time frame. Now, again, that's using the technicals and that's using the actual structure reading, right? If we were to look at RSI, RSI is also kind of letting us know that, hey, we're near the upper bound here. There is still some opportunity to go long, but just know you're near the upper bound. Be careful type of a deal, right? Okay, so let's shoot ahead a bit. Let's go to January 10th. Okay, let's go to January 10th. Well, we'll go to January 9th to see what we got going on there. January 9th had a little bit of a pullback. Markets kind of ranged around. RSI is kind of ticking down, kind of like, giving us a I told you so type deal. Let's go head over to January 10th. Let's see where we're at. January 10th, again, we're spilling a bit. RSI is somewhat doing well in terms of anticipating a break. We could potentially see a break back down into structure. So maybe based off of RSI, maybe this bad boy isn't ready to go short quite yet, right? Let's pull over to the 4-hour and let's see where we're at. So again, yeah, RSI on the 4-hour, we did hit an oversold scenario there, and it did calculate that pretty well from the 36 flats all the way down to the 34.90, so the 35 flats, but we just stuck inside of that range, and right now we're seeing markets somewhat on that 4-hour at a low. All right, but would we potentially be triggered short in this market? Potentially, depends on where you put your stops. If you put your stops right underneath structure, yeah, you could have been triggered short in that bad boy. On the daily, again, the daily's kind of showing you that, hey, you might want to be careful, continuing to go long. And then if you look over here to the left here, you also have another structural high. Now, remember, guys, we're not using fundamental analysis at all. All right, and so that's another thing that, again, personally for me, about in regards to just pure technical analysis and pure indicator reading, I think you're really missing out on a lot because you just don't really know exactly what's happening in the actual world, right? And guess who's moving the money? Real investors with real, billions and billions of dollars. And trust me, they're not sitting here looking at technicals. So of course you need to be assessing fundamental data. Let's shoot over a bit. Let's go to the 12th. Let's skip a day and see where we are there. So man, we got a massive break higher here. Okay, we got a massive break higher. Massive breakout. You could have played that as a flag or something along those lines. Cool. So our RSI is now, it's really working. Okay, it's really working. Let's go ahead a little bit. We had a few holidays. Let's go to the 16th. Okay, let's go to the 16th. And so we are, man. Okay, so officially RSI is now an overbought scenario. Okay, we need to be careful buying at this high at this point because RSI is overbought. We know what our long-term targets are, but we don't want to get caught playing at the high, so we might be able to start executing on a short around this area, right? So let's pull over. Let's go to the 17th, and remember, we could potentially start seeing ourselves. I know the 4-hour is probably going pretty wild right now, right? So yeah, there's your 4-hour, extremely overbought at the moment. Yeah, we could potentially start shorting this market based off of this RSI right now. Let's head over to the 17th and let's see where we are. Okay, so we did make a leg higher. We did make a leg higher, a massive leg higher, because this is a pullback and a close. But at one point during this day, this market ran all the way up into the 39.50s. I mean, this is when market started to get very, very volatile. Our 4-hour RSI is just really, really going wild right now. And you guys, we can see that it is. Oh, look at this. We're also getting an Rsi Divergence. All right, so that's something where traders will say, hey, look, when the RSI makes a high and then we make another high here on the chart, you usually will see markets start to pull back because the markets are losing steam, right? It makes sense. It makes sense. Let's head back over to the daily and let's tick ahead a bit. Let's head over to January. Let's see. Let's head to January 18th. Let's see where we are on the 18th. Okay, so wow, we made another leg higher. So again, at any point in time where you wanted to short this market, so far you're getting washed out. All right, we're back in oversold territory, and our RSI is not doing a good job at getting us short in this market. Now, this entire time, again, this is days. We're going by days. I just went over an entire trading week, and every day that week, folks, your RSI wanted you to sell off on this market here. Okay, and looking at it, just based off of the pure momentous leg, it looks extremely overbought. Okay, so again, your somewhat dangerous thing is telling me to short. Markets are obviously doing the opposite. I wish I had some extra information, but I don't because I'm purely looking at technicals and this indicator down here, all right? Let's go over to the 22nd. Okay, we're going to skip a few days or so. And then, boom, we made another leg. Okay, folks, I'm passing days and days and days. You guys gotta understand. If you're sitting here looking at this chart this entire time, trust me, you would have been wanting to sell this bad boy. When this thing is screaming at you over and over and over again until you kind of say, okay, I am not going to short this market. But we have another scenario of RSI divergence. We just made another high. Okay, we made a high here at the 3960s. And we just had this market tick higher. We just had the RSI actually come back up, and we're kind of flatlining right now, right? We're flatlining right now, and we're anticipating that we saw some RSI divergence. Maybe if we can get a close on the 4-hour, let's go ahead just a little bit. Let's go ahead to, let's see, 4 o'clock, something around 4 o'clock. That's actually around 6 o'clock. Where are we at? Okay, around 6 o'clock, we did make another high. Okay, we did make another high. We have yet to get a sell side signal here. Our RSI is screaming at us. We need to short this market, guys. All right, let's go ahead. Let's go to the 23rd. I don't want to go too far in the day on the 23rd. Let's go to the 9th on the 23rd, right on that US Open. Where are we at? We're at 39.80. On the 23rd, we're at, let's see, we pulled back a bit and we're back in the 39.80s. So what could have happened there? It's a little dangerous, right? Because at some point, if you're playing on that 4-hour, okay, if you're playing on these smaller time frames, you could have basically said to yourself, hey, look, let's start shorting this market up here at this high, and then where would your targets would have been, right? Yet you have yet to be stopped out if you got in at the high of this structure, right? Perfectly, just said, hey, at 140, I'm selling perfectly, right? Let's say that happened. Well, where would you have wanted to see this market run? Okay, if you're looking at this on bad boy on the daily, you probably even could have said markets should run back down to the 38s. You probably could even said markets, could run back down to the 38.50s. Okay, I don't think it's worth it for you to get a market run back down to the 39 flats. Even if it was, you're not quite there yet. Now, maybe again, markets are just consolidated, and they're going to consolidate in this area, and maybe we'll get our short. Okay, it's still early in the morning. It's U.S. Open. Let's see if we get our short by U.S. close. Let's see what we get. So U.S. close is 1600 hours. Where are we at? Okie dokie. All right. We did just break higher, guys. We just broke higher. Potentially got pulled out of that position. Maybe we can get a re-entry somewhere around this high. Maybe markets are just going to consolidate up here at $1.40. $1.40, very psychological level. Not sure what's happening and not sure why markets just move 560 pips. But again, folks, it's probably because of the technicals. Let's hope to see a pullback here at $1.40. Very psychological level. I'm going short, guys, at $1.40. Let's see what we get. Going short at $1.40. Where are we by the next day? End of U.S. Open. Okay, it's not looking good, right? So, again, you guys can just keep seeing here that RSI is giving you a real hard time. Okay, let's go over to the daily. You can see on the daily what this day looks like. What the hell is happening? All right, this market isn't just running like this for no reason. I would be very confused. As a technical analyst, I really wouldn't know how to execute on this position. Okay, now again, I did know that there was upside potential based off of the structure on the monthly time frame. But if I was playing on the daily, okay, if I was strictly playing on the daily or lower, and I'm using technical analysis in terms of these indicators, man, you would have been in a lot of trouble. You would have been in a lot of trouble on many different occasions, folks. We're at January 24th. We started this whole process at January 8th. Okay, January 8th. We have been getting overbought scenarios for the past 2.5 weeks, and we have yet to have a pullback. All right, that's the only thing that's a little scary for me in terms of RSI. Now I think we did end up getting a pullback eventually. Nothing too dramatic. Let's see where we actually ended up running to. Let's go to the 25th. Again, RSI is just going completely off the charts at this point. And so this 2018 run is really, really strong, extremely momentous, and it's not yielding the best results for our indicators here. So okay, we finally had a fairly dramatic pullback up here at this high at the 143s. Okay, the 143s, we had a fairly dramatic pullback, but that wasn't before we saw the market run all the way up into that level. Okay, and so finally, you're getting your RSI pullback, folks. If you think that, see, it works, guys, by the time you got this one pullback, you would have been blown. We've had over 10 signals since then on the 4 hour. God knows how many signals we've had on the hourly and the third hour and the 30 minute. Okay, so let's shoot ahead and see where we are in real life. Let's go to the 30th as of recent. And as we can see, we did end up pulling back down in the structure, coming all the way down, back down into the $40s, and we're somewhat ranging around $40s right now. And today, we're still around that area. So we're right at the, wow, so we've pulled all the way back up, and we're already back at 142. Okay, 142, right? So again, guys, it didn't work out so well for you here on the GBP USD. Okay, it didn't. Now, there's other scenarios where I can continue showing you guys, and I was going to show you all these different times where it didn't work, it was horrible, but you guys get the point. Okay, if you guys want to talk more about it, and if you guys want to see, me explain this process a little bit more, then head over to the community if you want more horrible examples, but I'm actually going to give you a good one. Okay, I want to give you a good one where RSI did work really, really well, and it happened over here on the USD JPY. Right around the first week or so of December. Okay, so let's pull over and let's go to December 5th. All right, let's go to December 5th. Let's see what we got. December 5th here. That's a Tuesday. Alrighty then. And so here on December 5th, if we can get the charts to load up, here we are. All right, so let's head to the 4 hour December 5th. As you guys can see, we did just get a pretty decent oversold scenario here. Now, the first signal didn't work out so well, right? You didn't get a real sustained move. Okay, you had markets come back down into structure, but we did see a lower low made, and you also did have some little divergence, right? So you see markets go lower, but you see that RSI lose a little steam. That kind of can let you know that you're going to get a run. Okay, and so as you guys can see, we got that. We got that. So you also got another overbought reading here, and I'm assessing the 4 hour, by the way. You got another overbought reading, and again, depending on where you traded that, you did have markets run all the way back down, over 120 pips back down in the structure. So potentially, if you would have got in on this overbought reading around this area, you could have potentially made some money, potentially. But again, we'd have to know, right? But we'd have to trade that a lot. Right, but you never know what you're going to be doing, right? Hindsight is 2020. Let's head over to the daily and see where we are and establish that daily time frame. On the daily time frame, we're still in the mids there on our RSI. Okay, let's shoot over to the 6. I don't want to miss and skip any data and have us go, oh man, we could have played something. So another scenario where RSI potentially, again, we didn't get this sell signal too well. Okay, we did not get the sell signal too well. We didn't cross that oversold area. Now, if markets are near the oversold, you can kind of be on red alert, right? You can kind of say to yourself, hey, look, markets are up here near this high. We could potentially start seeing a reversal. It didn't quite hit off right on the structure, but potentially you could have got in on a sell side situation there. Let's head over to the 7th real quick here, and let's see where we are. So we're on the 7th. We did not get a good buy side signal here on the RSI. Market sustained this structure here. Okay, so structure-wise, we did maintain this area. Fibonacci-wise, it looks like it's going to be right around the 38.2% fib, maybe even a 50. Yep, so right around that 50, 38.2% fib. Not quite on the 50, and then we saw markets come up into create basically a newer high. Let's shoot ahead real quick, and let's head over to the 11th. What happens from that time on? Now, from the 11th on, we see markets have given us an oversold scenario up here at the on the 10th. Okay, on the 10th. Let's see. Actually, yeah, right around the 10th, right around the 7th of December, we see markets are giving us an oversold. Maybe we can start shorting this market back down in the structure. We did just hit off on the previous structure here. I would like to see markets short right here at this level. Let's see what we get. Let's head over to the 12th. Okay, market's still consolidated. Let's head over into the 13th, see where we're at. Boom. Wow. Not bad. Not bad, RSI. You're doing a pretty good job. Seems like when you play this bad boy in the right market conditions, it can work pretty well. Okay, it can work pretty well. It's those trending markets, those markets driven by sentiment, where the thing becomes null and void and can destroy your portfolio. Okay, so it seems as if you need to trade this bad boy in a certain market condition. Now, we are almost getting an oversold scenario, folks. If we're playing the RSI, let's see how this performs. Okay, let's go to the 14th and let's see what we got going on here. Okay, so we had markets maintain, didn't quite get the signal, so I'm not sure if he would have executed on that. We did just come back down into that structure low. Let's see what happens. All right, let's head over to the 15th. Let's actually go to the 18th. We're nearing a holiday. Let's head over to the 18th and see what markets have given us. So we did maintain here a bit. So again, potentially you could have bought in based off of markets coming back down to the structure low. And now we see markets did head back up into this level, up only 50 pips. Probably didn't hit our risk reward targets if you were to play that low move. So, but then we see another leg higher here on the 19th. So it seems like RSI, it didn't quite hit off, but we definitely would have potentially have seen a buy side signal depending on that RSI. So if you would have played your RSI with the 80-20, you 100% would have had an entry by now. But obviously at the 70-30, we didn't quite get that little, that little alert, that red kind of coloration or the blue kind of coloration that we would have seen if markets were continuing sell side. Let's head over to the 22nd. Let's kind of speed ahead a bit and see exactly where we are here. So we have another scenario where markets are back at the high, RSIs are back at the high as well. Maybe, guys, do you want to short again? I say we short again. Our RSI is nearing overbought. It's not quite there yet, but I don't want to be too late on this trade. Let's head to the 25th and see where we're at. So not quite yet, but we are running in profit at the moment. If you would have executed on the sell side position, if you haven't executed on it yet, you could start to say, hey, look, when markets break past this structure here, I want to go short. The RSI is telling me to go short at this point. Let's see what happens if you would have started to sell at 13.25s. Okay, so we did end up making a little bit of a low here at the 13.25s. We ran back up into the 13.20s at the moment. Let's shoot over to this 28th and speed ahead and see where we're at. Okay, not bad RSI. Not bad RSI. If you would have taken the breakdown of this entire structural level, you would have ran into a pretty decent profit. You're up, close to, let's see, if you did at the 20s, you're up right around 60 points. Not too bad. Let's see fully, let's head over into January and see where this bad boy ends up. Let's go to the 4th here. Wow, pretty massive. This thing ran all the way back down into the $12s. And not only that, notice this, folks. During the new year, we also had another sell side reading, and we're up again. We're up 70 pips. So this RSI actually within this entire consolidation, this very ranged bound structure here. Notice this up and down movement where markets are extremely consolidated. The RSI has done a very, very good job at calculating when we should see a reversal. Okay, so again, in this scenario, this bad boy is doing a pretty good job. Let's head to the 16th and see where we're at. Wow, monstrous sell side, monstrous sell side. So again, if you would have sold at this high, again, the RSI isn't quite getting there on the 70, means it wouldn't have really hit it on the 80. But if you would have played it in terms of the market failing to break this high of structure as well, then you had probably one of the bigger size positions of of the quarter. Okay, this is over a 300 pip move. Now, here's the bad part. Definitely, you had RSI kind of screaming at you to start buying this market back up, and these signals did not work out too well. Okay, so this is just, again, another scenario where you want to be careful. Now, if we look back at the daily, we did just get a buy-side signal on our daily RSI. Maybe that's going to yield some positive results. Let's go to the 23rd and see what happened. Not too much. Markets didn't sustain so well. Couldn't push back up into the structure here at the $12s. Remember, usually if you get a break outside of a level, you want to retest back up into the base. That's not what we got. Pretty interesting, folks. Let's shoot over. Let's turn off on demand and let's see where we're at the moment. We do right now have RSI crossing back over on the daily, right? So we have RSI on the daily giving us an oversold reading, but I'm going to tell you guys this, we are long in this USD JPY right now. Not because of RSI, okay, because of structure, but we are long in the USD JPY right now in real life, okay, in the community. I'll show you guys some screenshots here, but nevertheless, folks, again, you want to be careful with this RSI in the wrong market conditions. right. So it seems as if you're playing in trendy markets, you really need to be careful as to how you want to play with that RSI. Okay, very careful. You can get a wrong reading for months. Okay, I didn't even show you guys the Aussie on this RSI. It was absolutely horrible. I'll just show you guys a picture of the Aussie here. How do you think the RSI performed throughout this time here? This is a 4-hour dating all the way back to December 7th, folks. We didn't have a pullback substantial at any amount. It was, I mean, at all. Okay, now what's interesting is that one moment this market did go short. Notice the largest pullback that we're seeing right now in this market, folks. We actually traded this pullback. Okay, so while the RSI is telling you sell, 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 we ignored most of this entire sell side position here up until right now because of the technique that we use that involves fundamental analysis, that involves the technical structure reading and price action. It's no secret sauce. I'm not gonna know, oh yeah, our technique is exclusive, folks. It's the stuff that you guys probably know about, but the most important thing is it's all about the implementation. Okay, knowledge is only knowledge until you know how to implement the knowledge correctly, and a lot of folks just don't know how to implement price action correctly. They don't understand anything about fundamentals, so they're putting themselves at a monstrous disadvantage. Okay, so the Aussie sell side idea was posted here by Jesus. He basically mentioned that if we see a break right around the 4-hour structure, right around these 80, I guess that's around the 80-30s, we should see a continuation there. And as you guys can see, we did see a continuation once we saw the breakout of the right around the 80-50s, 80-40s, and we're seeing markets pull back down as of right now as well. So maybe we can get a continuation back down into structure here. So the largest sell side day, we actually executed on that move, all right, and ignored all the bullshit up until this point right now, because again, the overall general conclusions that we make as to how to trade outside of just structure, outside of just reading some kind of indicator. All right, so guys, I'm about to close out here. Continue watching. I'm excited that you guys are still here with me. Please be careful when you're using this indicator, but I'm just going to follow up with some ideas as to what I think about RSI and how you guys can implement, if you're going to use it correctly or if you're going to use just pure technicals and price action reading, how you guys can use that correctly as well. Guys, so look, in closing, I don't hate RSI, right? I showed you a perfectly good example of when the USD/JPY worked absolutely amazing using RSI. I mean, the readings were close to perfect. You didn't get quite there on some occasions when you wanted that overbought or oversold, but it was very, very accurate in terms of saying, hey, look, markets are about to pull back. You might want to start looking long, or you might want to start looking short. It did it like, what, 4 or 5, I think maybe 6 times in a row. Okay, so in the right market conditions, RSI can be absolutely amazing, but you have to understand that. You have to put it into a category and say, hey, look, this is for a range-bound market. I'm not just going to have RSI at the bottom of my screen all the time and just always be looking at it and saying to myself, hey, overbought, oversold, overbought, oversold, when markets are doing things like what they're doing right now. Okay, and that's what a lot of traders I'm seeing are doing. Some of the newer guys in the community are mentioning, hey man, look, I'm looking at this, this USD/JPY, it looks oversold right now, or they're saying, hey, I'm looking at the Euro-U's oversold, man, I'm trying to sell it off. And so I'm like, dude, look, I'm very timidly buying into this US dollar strength right now, right? We do have a US dollar strength play on with the USD/JPY right now, but again, outside of that, I just don't want to put myself in a situation where I'm buying in to the US dollar strength only for this dollar to liquidate even more. Okay, so I am not correlating a pullback on the US dollar with an RSI overbought or oversold reading, and I highly suggest that you guys maybe look at other things outside of just RSI. And if you're going to use RSI, again, put it in a box. Say, hey, look, I only trade RSI in consolidated markets. Outside of that, I either take it off my screen or pull up a whole different chart set. And when I am trading RSI, I'm only looking at it on the daily or the 4-hour. If you put it into a box, you put it into a certain condition that you want met, then you derive an edge. But when you just kind of use RSI for everything, folks, that's when you can get swept and get your account absolutely decimated, because we saw 2-3 weeks of where RSI just gave us a buy reading and it just did not work out. All right, so guys, don't be mad at me if you guys use RSI. I'm vouching for it. I'm just saying that make it a strategy. Okay, don't use it and blanket it for every single market condition. And definitely you probably can derive an edge. I think I can do it outside of the RSI, not using it. But if you need it, that doesn't make me smarter than you or anything like that. It just means you put it on your chart and I don't. We're both looking at the same thing. We're both determining if markets are overextended okay? And if a retracement's about to come in, we both are doing that, right? Markets can either extend or retrace. We're both looking at the same thing. We just use different methodologies to make the whole process happen, right? But that's my reason for not doing so. Guys, look, your profit, always my motive. If you guys need anything, totally let me know. If you guys want to get inside of our trading community, go to the link below, okay? It's going to be right there. You guys can just sign up, hop in, learn the foundations, and continue on there. All right, guys, hope you have a good one. I'll talk to you guys real soon. Peace.